Hello, everybody. My name is Bennett Tchaikovsky, also known as the accounting professor. And today we're going to go over managerial accounting relevant cost for making managerial decisions. So this is our overview. So as we take a look at this over here, my disclaimer and copyright notice, the information and opinions in this presentation are those of myself and not my employers or affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. The presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008 to 2024 by Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. Presentations from time to time use information from third parties. The third party information is the property of those respective copyright holders, and I'm not making any kind of claim to that third party information. And any names of companies that I might make up that might be appropriate and inappropriate, I try to be an equal opportunity offender. So let's take a look at the overview. So when we're going through and making decisions in managerial accounting, and the thing about managerial accounting is that it's kind of if you're taking this course, and this is kind of towards the end of the class, it's kind of like a funky, it's kind of like a funky way in terms of going through and learning. And what I mean by that is that unlike financial accounting, which is incredibly smooth in the way that we start with preparing financial statements, and then we go to, looking at inventory, receivables, cash, property, plant, and equipment, liabilities, equity, and then end up with a cash flow. With managerial accounting, we're like a little bit more all over the place. But when we're going here kind of towards the end, we're really looking at trying to say, like, okay, when we're making a decision as managerial accountants, how do we go through and do that? And I want you to kind of remember that as we're going through and doing this, we have to remain as impartial as possible. We want to go through and communicate with the numbers as best we can. But at the same time, we also want to kind of consider more qualitative factors in our analysis, right? Meaning that, well, something might make good financial sense, but it may not make sense for our business. So just kind of think about that. So one of the things in this chapter that you really want to kind of take into consideration are the concept of what we call sunk costs. What exactly is a sunk cost? Well, over here on accounting tools, and I will basically leave this for you in the video. A sunk cost is a cost that an entity has incurred which it can no longer recover. So by that definition, if I were to say make a very large expenditure and, I can't get that money back. However, I want you to also think about this as well. If, for example, when I'm not going to be too mean today, I'll try to be as nice as I possibly can be. Um, well, if we are going through and say I was going to go through in the city of Irvine and I wanted to build an $80 million football stadium for a high school. And if that were to be approved and went forward with it, the fact that you have an $80 million football stadium for a high school, the challenge with that is that, well, that's great. You have this football stadium. However, was that the best possible use of the money? Maybe the high school, they don't have a really good football program. Do we want to be allocating that much of our resources to something that could potentially be causing injuries? And so when you look at that, the creation of something that was very expensive is a sunk cost, meaning that once it's been decided, once it's been built, there's no way we're basically turning back. However, we can look at that sunk cost, meaning that they'll give you another example. My wife, uh, she wanted basically in 2008, we bought a BMW X5, and that car was a piece of work. And I knew it going in, but happy wife, happy life, right? And so when we bought that car, there's really no going back because the moment you drive it off the lot, it loses a ton of its value. And so that's really going to be like a sunk cost as you're, looking at it. There's no way I'm getting that money back. My legal education that I spent, years ago going to Southwestern University School of Law, there's no way I can recover it. However, maybe I can perhaps use my law license to my advantage going forward. So a sunk cost is not something we can go through and recover. However, we can use a sunk cost to say, did management make a good decision? If the people that decided to build a football stadium in Irvine, I'm just making this up hypothetically. If they decided to make this decision, then should they be making decisions in the future because they seem to be making very poor choices? So we can't make perfect decisions, however, and it's a sunk cost. There's not really nothing we can do about it. But what we can do is to try to make better decisions in the future. And maybe that means that the management that decided to make that bad investment needs to be replaced. Food for thought. So a sunk cost, we're not going to be considering that in our questions over here. And so we're not going to be considering that here. And also just kind of think about, we're never going to be making perfect decisions. So I'm never going to be able to make what we call perfect decisions. However, we can try to go through and make the best decisions we possibly can. So what we're going to be looking at this over here is that we're going to go through a couple of different scenarios. And if you're taking my class, this is kind of like an outline or a mapping of what I generally test on, or the different areas that I can test on for my exams. And the scenarios we're going to be looking at are selling. So assuming we don't have to deliver anything, should we sell something or should we process it further? We're also going to be talking about segment elimination, meaning if we decide to eliminate a business segment, what happens then? Should we be accepting additional business? Should I, if I have defective product that I need to go through and deliver to a client, should I scrap it and build new or rework the defective units? Another thing we're going to be looking at is qualitative business decisions. We're going to go through and look at that as an example. And the last one is going to basically be make or buy. Should we make it or should we buy it ourselves? And that has a much greater context in the terms of outsourcing. And so I'm looking forward, and thank you for watching this brief overview. If you have any comments, feel free to send them to me at 1812cpa@gmail.com. And I look forward to seeing you on future videos. Have a great day.